a critical area of concern, not just for crypto, but for finance, but specifically for crypto, and that is the world of regulation. I like to think that one of the challenges that we face in trying to figure out what our legal system looks like relative to blockchains is that it's like ramming a square peg into a round hole, because so much of our legal infrastructure is built around the premise that there's somebody to blame, that there's somebody who's left holding the buck, that there's there's an authority there in charge. And in a blockchain, as Steve was saying, you, the key holder, you're in charge. So it's a paradigm that's completely different, which makes it challenging for figuring out how to think about all these concepts in the realm of what governments to do about it. Anyway, Jordan French is going to be from the street, is coming out to moderate this. We've got a great panel. You'll notice that Brent Tomer from the CFTC is on the slide when it comes up, if it doesn't. Just want to point out that he was more than happy to be here. Wasn't scared of being here. Can anybody guess why he's not here? Government shutdown. Thank you very much. All right, so we have our own little representation of this current problem in this country right now, the absence of Brent Tomer, unfortunately. But the rest of the panel are a fantastic group, and it's going to be, I'm sure, a very enlightening session. So, Jordan, just take the stage.
Just quickly about me, I'm Jordan French. I'm on the editorial staff at large at TheStreet.com, also the executive editor of Grit Daily News. With me is an awesome, awesome panel. These are all absolute veterans. Without delay, want to introduce them because we're going to be talking about regulation, or what originally this was titled, which is how to stay the F out of jail. First is Perianne Boring. She's with us, president and founder of the Chamber of Digital Commerce.
That's correct.
They wrapped your name up, but thanks. Thanks, Perianne. Have a seat.
Accoutrements here.
You can have a seat right here, actually. I'll start you there and I'll bring him in. Joe Cutler's with us. Joe is a partner at Perkins Coie. Fascinating conversations that we had right before we hopped on stage. Joe, thanks so much. Have a seat next to Perianne. And last but not least, with us is John Beccia. John's with FS Vector. Fascinating stories with him as well. He's advising some of the bigger and top companies in the blockchain space. Have a seat, John. Perianne, I want to start with you and put 2018 into context. I did an interview with Michael Turpin, and one of the quotes that stood out, this was a little while ago, was couldn't get any worse than 2018. You have a different take, though, given your history, lengthy history in the blockchain space.
Yeah, I mean, we founded the Chamber in 2014, so we've been through a couple ups and downs. Michael's been through them too. But when we launched the Chamber, it was a totally different environment. The word blockchain wasn't really used at that time. We just called it Big B of Bitcoin to represent the protocol. And we were suffering from some very severe public relations issues. We had gone through Mt. Gox, which that exchange lost about, is it $500 million worth of customer funds. So a pretty big black eye to the industry. And then, of course, we're dealing with Silk Road, which was this place where people were buying and selling legal drugs with Bitcoin and crypto. And really the only thing anybody knew about the industry is Mt. Gox and Silk Road. Most people just thought it was funny money to do illegal stuff with. So we've had to really fight hard to ensure that policymakers, regulators, the public in general can understand the greater benefit of blockchain. And that's taken years to build. And coming out of that divot from those public relations nightmares in 2013, 2014 was basically like going up a massive hill with a big concrete boulder that you're rolling up. And we've been up and down many valleys, but we've been through, I guess, this ICO issue where there's been a number of enforcement actions that have come out of the SEC, and it's definitely caused the industry to take a big step back, and of course the markets are down as well. But we've been through a lot of these ups and downs, and we're in a much better place today than we were in 2013 and 2014.
So good Sisyphean reference there too, as well, Perianne. But in a lot of ways, you're just happy that blockchain isn't just known for illegal trades and other activities like selling narcotics. We've come a long way.
Yeah.
Nonetheless, cryptocurrency markets, the blockchain space, still faces myriad issues. We've seen depressed prices. One big factor that this audience generally perceives is the regulatory environment and its accompanying uncertainty. So Joe, if you could just frame that for us and explain, we entered 2018 with broadly high markets, what could have been a receptive or supportive regulatory framework or environment, and what instead happened?
Well, I mean, I think that the amount of capital that flowed in through ICOs and different token issuances was unexpectedly high, and unexpected principally by the regulators. I don't think that they anticipated that it would be measured in the tens of billions of dollars of investment over the course of less than 18 months. And, the traditional approach has been that the regulators were sort of trying to keep pace with innovation by regulating incrementally. They would issue guidance. FinCEN issued guidance in 2013 and kind of took a hands-off approach while that guidance sort of soaked in and then selectively enforced against the really bad actors. But so many people were investing in ICOs, and there was a craze around it that drove the price up, and it also drove speculation, and there were a lot of other smaller things that popped up that invited more retail investment, moms and pops and grandmas and grandpas. And, it was this convergence of Bitcoin and blockchain becoming a household thing and an opportunity to make a quick buck. And unfortunately, there were also actors who misbehaved in that market, and they attracted the attention of enforcement regulators who acted as they should have. And so I think the landscape in 2018 was very hopeful by crypto people, very excited by investors, and I think the regulators, frankly, got a little spooked and started to act.
And certainly money talks, and in an interesting twist on the regulatory topic, what does the appeal of cryptocurrency and that rise, certainly throughout 2017, say about traditional investments? Perhaps it says something about the alternatives to investment.
Well, I mean, the reason that ICOs were so attractive is that they looked on the outside like they were available to non-accredited investors. I mean, to be frank, right? You could go and invest in an ICO and wouldn't have to go through the normal hurdles in the early days. And the SEC's position is, well, if it should have had those hurdles, you should follow that same kind of structure in structuring a raise. On the other hand, many of the companies who developed this tokenized technology, the fundraising element was just one piece. And getting the token into circulation and collecting some compensation for it was an important part of getting the token, which has its own use, into circulation. And so there's really a disconnect between the excitement about raising money with a token and the excitement about launching a service and a technology that uses token technology and getting paid for it. And I actually still don't think that those things have aligned yet.
Yeah, and thanks for sharing that. And nonetheless, though, John, we nonetheless did see the SEC in particular and other regulatory bodies, including globally, come up with something. One namely we can speak to is Ether. You advise so many companies that are peers that have issued cryptocurrencies. What's in their minds right now? Where do they sit in terms of understanding what they should do next with a cryptocurrency?
Yeah, I might want to just take a step back too and talk a little bit about 2018. So I come to this, most recently I was the general counsel at Circle, and so I date back to 2013. And again, in 2013, just like Perianne mentioned, there was a lot of concern in terms of where this was going. You might remember Bitcoin was trading around $100, $200, and it wasn't until there was a hearing up on Capitol Hill at the end of the year, and the FinCEN director said, this is not everything is money laundering here, and there's really serious companies, and there's innovation possibilities. And with that said, the price went up to $1,200, and there became more serious players and more investments in this space, and we were off and running. And I think, if you just came into this from 2018 and you just new into the blockchain space, you kind of miss the rest of the story in the context, because I think what's happening now, there's a lot of optimism, because In 2013, we were talking more about Bitcoin. You remember the original white paper from Satoshi just talked about Bitcoin, right? In terms of the blockchain usage for the payments network. And we're well beyond that. The ability of the technology and the underlying use cases have expanded. And I think, from the perspective of the regulator now, it's how do we allow this innovation to keep going forward, whether it's the SEC, whether it's FinCEN, whether it's international bodies, while also protecting against the risks. And also, really the question you need to ask if you're a regulator or if you're someone in the industry is, what am I doing? What do I want to do from a business standpoint? And what are the risks associated with that? And I think, as I advise clients in this space, that's the roadmap in terms of, we can't control having clear regulatory certainty within all the regulatory frameworks, but what we can control is how we adapt to that and what we pursue from a regulatory roadmap. And so it's really trying to understand where the gray areas are, where the actual black and white is, and being able to live in that space. And I think there's a lot you can do. And we can expand from a business standpoint because we're starting to get these, the picture is becoming more and more clear. And I think, again, there's reason for optimism going forward.
Yes, certainly. And Perianne, John mentioned some of the gray areas. One place where you can push in particular, running a body that's in DC and can actually influence policy. What are the particular policies that you want to see implemented that would actually help foster blockchain innovation and adoption?
Yeah, it's a loaded question because there's a lot of different stakeholders from the policy environment that are involved in this conversation of regulating blockchain and digital assets. We have the SEC that's, of course, applying the securities laws. You have CFTC that's looking at digital assets as a commodity. You have FinCEN that's applying the AML regimes, looking at it from a currency perspective. Then you have IRS that's taxing the same technology as property. So there's a lot of different things going on. Really what we've identified is a lack of strategy and vision on behalf of the government. What is our plan? And what we're calling on the government to do is, at the highest levels, preferably from the White House or somewhere within the administration, to issue a statement that says, we believe blockchain technology is important and we should have a plan to foster its development in the United States. And then that plan should involve bringing all those different regulatory actors together and forcing them to coordinate. Because what we have now is they're tripping over each other, they're competing for jurisdiction, they're all saying different things. So for companies that are trying to operate in this space, it's very complicated and there's a lot of mixed messages and it's incredibly expensive to just figure out the regulatory clarity they need to move forward.
And who would you say would be most ideal to issue that sort of edict?
Well, I mean, it would be great to either have it done legislatively and signed by the president or just come through the president himself. There is precedent for this, and during the commercialization of the internet, the Clinton administration did a very simple proposal to do just that, and that's really where we're getting a lot of our playbook from, is recognize it's important and have a plan on how to foster its development. So it's not brain science. There's other countries that have done this. And right now, because of the lack of regulatory certainty and clarity, many companies are opting to either leave the United States and go somewhere else that's more friendly, or for companies that are based overseas, they're just blocking out US people, investors, and consumers from participating in their projects. And we do have data that shows that, and that's a very sad reality for the United States. So again, we need better leadership at the highest levels of government that make this a priority. We're spending all this time talking about a wall. We should have as much of a dialogue about the future of technology, and blockchain is going to be the backbone of that in the next 20 years.
If I just could inject here, I think, in terms of answering that question, it's really where do you land on the ecosystem in terms of what you want for a potential fix, whether it's a regulatory fix, a legislative fix. We've been talking about early stages. Again, we talked about cryptocurrency. There's over 2,000 cryptocurrencies trading. A cryptocurrency essentially is a way to store value. You can transfer this value on a decentralized ledger called blockchain, and there's different activities that can take place there. You can be an exchange, you can be a wallet service, and there's all kinds of regulatory risks that are associated with that, whether it's anti-money laundering or security, as we saw with Mt. Gox and so on and so forth. And now we've gone to a different level where you have things around tokens, and really the discussion has focused on tokenization of things and around the ability to raise money through ICOs, but really tokens itself is really where the excitement lies, and where, with the advent of smart contracts and Ethereum and the ability to tokenize and to have things such as true utility tokens, and a way to, basically a token can hold any underlying asset. And so I think that's where really now the focus is from a regulatory perspective.
It's certainly, and picking up on that note, Joe, this audience, a number of the folks here have either already issued a cryptocurrency, they run a company that does, or involved in one, or are still contemplating it and sitting on that fence. We, at the same time, probably won't get this edict that Perianne speaks to that would be most ideal, just similar to the Clinton signed Internet Protocols Act. What can this audience do today to understand how to best manage and put forth what they want to do in the blockchain space without running some left field risk of cryptocurrency being deemed a security and getting caught off guard?
Yeah, so a couple of things. That is a fairly large question, but I would break it into two parts. The first part is going off what John just said. I mean, what you just said, John, is a very big statement, and it's an indicative of what's happened in the industry. And we kind of need to get our nomenclature right, that every token isn't a cryptocurrency, right? In fact, at our firm, we've renamed our group 3 times. First, it was named the Virtual Currency Group, and then it was named the Cryptocurrency Group, and then it was named the Cryptocurrency, or the Blockchain and Digital Assets Group. And the reason that name evolution happened is because the technology has moved from being just taking stores of value and creating systems to move that value around to tokenizing all kinds of things, not all of which are money or value. Sometimes it's access, sometimes it's tracking paper, sometimes it's tracking people, sometimes it's tracking votes. And so the first thing that anyone who's gotten a blockchain project off the ground needs to do is know very solidly what their token is and how it is used. And from there, you have kind of a taxonomy of where the regulations are going to fit. You say, okay, what am I using? Am I using this to move value around, or am I using it as access to my program, or am I using it to track containers on a ship? Because it's a lot easier to know which regulatory regime applies when you ask that question. Because if you're not using the token to raise money, it's hard for the SEC to have jurisdiction. If you're not using the token to pay for things, it's hard for FinCEN to have jurisdiction, right? If you're not using the token as a store of value like property, it's hard to stick it in the right box with the IRS. And so, when people come to us and say, here's my project, what do I do with it? The first thing we ask is, well, what are you doing with it? And once we have those verbs, right, those activities, then we can say, well, that activity is regulated by this industry or this regulator. And so I think a lot of cryptocurrency or crypto projects or ICO projects, as we might call them, they launch a token. Unfortunately, many of them launched with the fundraising in mind first. And then attached to that goal was a project. And I would encourage anyone to sort of flip that model upside down. You need to start with, what is my project, and is it worthy of raising money in the way that other people have raised money like an ICO? Because if you do, then you may be wading through the muck of regulatory compliance with things like the SEC's concerns about unregulated fundraising. If you already did that, you have a really tough question to ask yourself right now. And in the recent 2 enforcement actions against AirFox and Paragon, the SEC signaled an intention to hold some projects accountable for having raised money without necessarily going through what they perceive to be the right hoops. And they've said you need to register these tokens as a security. And I think there's a lot of post-sale ICOs that have said, well, why don't we just do that? And the concern there is if you once you raise your flag and say, I'm going to admit this might have been a security, there's a lot of things you can't do with the token after the fact. And one very simple example is you can't use the token like money anymore, because for the same reasons you can't pay for things with a stock. You need to have a broker-dealer in the middle of there, and that suddenly gets very complex. You might not be able to use it as an access token, right? Because that's not really what it is anymore. And so the short version is there's not an easy answer to that, but self-servingly, I would say you need to hire a lawyer, and you need to hire a good one who understands the complexity of this.
Plug there. Let's flesh this out some more, though. It sounds like there are these sort of mazes that some cryptocurrency issuers and or token issuers have gone down and they can't necessarily get out of. For example, where we've seen market prices fall, where monies were raised in Ether, converted into cryptocurrency, the sum of what was raised is much less, and they can't necessarily perform and build whatever their project is. Are they just screwed?
I mean, that's not really different than any other project where your fundraising doesn't rise to the level you hoped it would, or you have operational challenges. I think that the bigger question is what happens when you raise a bunch of money that you don't convert, the value of it goes down, and then you have to do a rescission if you have to give it back. I think that's a very challenging question. But to your point, yeah, I mean, if the value of what you raise is suddenly tanked, it's going to be hard to then spend it, and because you don't have as much money as you thought you did.
Right, and let's take a peek at what the SEC might want to do, or what's kind of what they're looking at, and what's inside enforcement side. Perianne, I'll go to you on this so we can flesh this out some more. Perhaps a lot of the inaction is a lot of enforcement officials don't know what to do. What are they thinking? What might be inside their heads right now as they look at this environment, especially where prices are lower, companies have raised money. Some of them may have issued securities but didn't register it that way. What are some of the options that the SEC has, for example, going forward?
Well, I mean, the SEC is doing their job. They're applying the laws that they have the best way they know how. Again, the problem is we don't have an actual plan holistically on where are we going. So the SEC is hammering every nail they can come after. And so you're seeing enforcement after enforcement action, after enforcement action, after enforcement action, which are all negative signals to the industry and the market. There is no balance to the conversation. The other side of the conversation is blockchain is important. What can this technology do? How is it going to create jobs, investment, economic opportunity? That conversation is not happening. The only conversation we're seeing is the enforcement side. So negative, 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 nothing positive to balance it out. So at the SEC, one thing that they have done, the head of their crypto group was also the head of enforcement, Valerie Shapanik. She has recently left the enforcement side and is out of that. So she's more focused, more high level on the vision of what the SEC is doing. That was a great step. Again, we can take an enforcement angle, but we need to balance out the conversation and talk about what this technology do and have a plan to foster its innovation and not just spend all of our time going after the bad actors. There are companies there is fraud, there is abuse in the industry. We've done a lot as a community. All of the people on the stage have contributed to that conversation. But we also need to make sure that the good actors, the potential benefits of blockchain, that conversation is also coming through. And that's a big part of the reason why we have, and why it's important to have advocates working with government whose full-time job is to educate them, not only on the risk, but also the benefits.
And speaking of...
Can I just add one little comment to that? There's a conversation that is in play right now that has not been resolved, and it is the linchpin. And it's on this concept of, if you know it's by its sort of proper legal name, it's the mutability question. But put in plain English, when you develop a token that has a certain utility, like access to software or tracking containers on a ship or stakes of voting that has nothing to do with fundraising, in a vacuum, that should be allowed to be in the marketplace free of any kind of investment-based regulatory restriction. When you sell that at a certain point, maybe when it's not quite ready to be used, that's what causes all the concerns. And so there's a conversation happening right now between those players in the marketplace who have developed true utility tokens that are going to be useful in the marketplace and the SEC. And the SEC has been presented on a number of occasions with opportunities to analyze that question, that legal question. If they come down on side A as, we don't really believe that if you raised money before the token was fully ready, it can ever be anything but a security, then there will be a much smaller group of projects that survive. If they come down on side B and say there's actually a path for a person to develop a token, get it to a certain minimum point of viability where it actually works, and then sell it so that you can, just like selling, we talked about this on email, right? Like you manufacture shovels, sell a bunch of shovels and make enough money to build a factory to make tractors, because your ultimate goal is to make tractors and sell them. Nobody says that's the sale of a security for somebody a shovel. The reason is because someone can take the shovel and use it. It actually has use in the marketplace. And that debate is the single most important question, and the SEC has not resolved it. They don't know the answer, or if they do, they haven't come out and said, this is where we stand. And until they do, every token project out there is basically in a holding pattern because they don't know what to do.
But to me, it sounds like it's obvious that they wouldn't be the ones to ask that question. That question would go to the CFTC, because what you're speaking to is a question of commodities. For example, just to rehash the example, you sell a bunch of shovels, enough to build a factory later because you sold so many shovels. Shovels are certainly a commodity. I want to go to you on this, John. What result if the same question were posed to the sister agency at the CFTC? Would they have perhaps a different answer or any answer relative to the SEC?
Yeah, I'm not sure they would have a different answer. I think they would just, again, they're looking at this. There is a bit of a turf struggle here between the SEC and the CFTC, and I think between the two, the CFTC is standing back a little more here. And I think, they've even called for the industry, parts of the industry, to come up with self-regulatory organizations and to kind of get your house in order from that perspective. But I wanted to take a quick step back on the enforcement piece and unpack a couple things, because I think I see the SEC enforcement, and it's not only SEC, but it's the states as well. I see enforcement in general as a positive thing, because it's going to kind of basically shape the fabric of what the policy will be as well. You don't want to see regulation by enforcement. However, I think you're seeing some of the bad actors getting weeded out, and you're also seeing some of the things get uncovered in terms of what is the interpretation of the laws and regulations. And I know the SEC has said that they're going to be coming out with more interpretations and guidance around ICOs. But in the meantime, I think you're really seeing a roadmap through some of the SEC actions. And the other thing is, on the state side, there's been a ton of sweeps by state AGs and state securities regulators on the ICO front, and as well as the exchanges. The New York AG did a pretty comprehensive review of subpoena information on exchanges, and I think that was really telling as well in terms of, we're still a nascent industry, and we're still at the beginning stages of something, and I think this this learning experience and getting more information is really going to color where the regulations are going to go going forward.
Yeah, certainly. Picking up on that, for you, Perianne, it sounds like there's a lot of data collection that's going towards a policy that you speak of, but is 2019 the year that we get some sort of coherent policy on what to do with cryptocurrencies?
There's been numerous people at the SEC who have said that new guidance that will have more clarity around tokens is coming, so we are expecting that. I do think that's a positive development, because thus far, really what we're seeing is guidance through enforcement or regulation through enforcement, where the only thing the industry has to respond to is them going after bad actors and the enforcement actions that have followed. We haven't had any very clear guidance from the SEC that says what you can do. We know what you can't do, it's not sure what you can do. So that's one side. We're also having a lot of conversations around custody, so the custody of crypto assets. We do know the SEC is spending quite a bit of time looking at that, and it's possible we'll see some guidance or additional statements on the correct ways in which companies can provide custody solutions for digital assets, which is going to be important as well. That's one of the big reasons why we're seeing a lot of the enterprise and institutional investors sitting on the sidelines, because they need better clarity around that side of the industry as well.
One really quick point. The dynamic is really positive in terms of whether it's the SEC, the CFTC, or other agencies. they will take meetings, they will have conversations, they will discuss what you're doing. And so I think, when I advise people, it's so much better to be proactive and transparent in terms of what you're doing, because there is a dialogue, and I think that's a really positive development as well.
The SEC has an email that you can email into to get some sort of opinion rendered. There's usually a hotline. Have any of you had a client or yourselves called in?
So, can't divulge any client confidences, but I can give some general observations, and there are two. Number one, they're happy to take your meeting, and they're happy to listen to you.
Good to know.
And I'm nodding in silence because they won't tell you anything back.
Okay.
And so, so they're happy to listen, but they're not going to actually give an opinion. And the second thing I was going to say is the idea that many people have floated, like just go ask for a no action letter from the SEC, is never going to happen. Yeah. The rarity with which the SEC gives no action opinions is off the charts. It doesn't happen. And so, unfortunately, I think people are stuck with a bit of uncertainty for quite a long time.
Sounds like getting an answer from a VC. We have just a little bit more time. I do want to get one or two really quick questions in if there are any. Yes, you down there? Just say your name and I think we have a proctor with a microphone. I just don't see her. But I can hear you. Go ahead.
Will that uncertainty keep the market down the whole year?
Yeah, so the question is, will the uncertainty
keep the market down?
Yeah, keep the market depressed.
Is the market really depressed? Like, there's a piece of me that kind of wants to scream out, like, Bitcoin's still trading way up from where it was 2 years ago. Mm-hmm. So, I know everybody is upset about where the market is today because they all invested right after it went high. But to those of us that were in 2013, it's not that bad.
So it's all relative.
Yeah, I don't think that, it's unlike the traditional securities markets. I don't think there's really any fundamentals here. So I don't think the regulatory overhang is really impacting the market at all.
And Perianne?
Well, the idea of an ICO is just one use case.
Right.
It's one thing. We're innovators, we're pioneers, we're trying new things. This is the nature of a nascent industry and of startups. You have to keep trying and iterating. Not every single thing you shoot is going to be a success. So some ideas may not work. Policymakers may not allow it. Keep going. Let's find out what will stick.
And we'll end on that note. Let's see if we can have, do we have time? Yeah, okay, I want to let him ask. Yeah, please do it.
So you did an ICO in 2016, late 2016. Is path to compliance open a can of worms?
Does path to a compliance post-ICO open a can of worms?
With the SEC.
So the proper and the most responsible answer to that is unsatisfyingly vague, which is it's a facts and circumstances question. I actually personally happen to believe that there are ICOs that happened that didn't break any laws, that were compliant, that are not illegal. And we've spent a whole lot of effort at our firm, for example, and in partnership with the Chamber, and the Chamber just published a paper from their Token Alliance on ICOs and tokens and regulation. So the real answer is if you did something wrong, it's important to figure out what it was and identify what you can do about it, if anything. It's also important to find out if you didn't do something wrong and give yourself some brownie points and go forward. You don't always have to innovate in a hole.
Don't need to innovate in a hole. That's all the time that we have. I'm Jordan French. I want you to join me in thanking our wonderful panelists. John, Joe, Perianne, thanks so much for your time with us.